This video is all about RRSP limits. Have you ever wondered how much you can deposit into your RRSPs, or what the terms deduction limit, contribution limit, or pension adjustment mean? Well, in today's video, we're going to answer all of those questions and give you some basic examples so you understand how your RRSP limits work. If you've ever been confused by RRSP deduction limit or RRSP contribution limit, you are not alone. So what's the difference between these two numbers, and which one tells us how much can we put into our RRSP account? Well, the deduction limit has to do with your taxes. It lets us know what's the maximum amount of RRSP deposits that we're allowed to deduct from our income. Whereas the contribution limit tells us how much we're allowed to deposit into our RRSP account. So how does CRA even come up with these numbers? Well, the deduction and contribution limit are actually calculated the exact same way. That being said, those numbers aren't always the same, and I'm going to touch on why in a moment. But basically, it's 18% of your previous year's earned income, up to a maximum. For 2019, the maximum's $26,500. Now, if you didn't use all of your contribution room from previous years, it actually carries forward, and that's going to get added onto your limit as well. And if you work for a company that offers a pension, you need to be aware that that will impact your RRSP contribution room. That's what we refer to as a pension adjustment. If you're not sure if you have one or what the dollar amount is, take a look at your T4. If you see a number in box 52, that's your pension adjustment. Whatever dollar amount you see there is the amount that your RRSP limit is going to be reduced by. So if the deduction and contribution limit are calculated the same way, then why would the numbers ever be different? Well, one example is someone who makes an RRSP deposit but doesn't claim the deduction that year. So why would anyone do this? Well, they want to take advantage of that tax deferral growth today, so they deposit and invest the money right away. But they know that they're going to be making more money in the near future. So instead of getting that deduction this year, they wait until they get their bonus or their pay raise, whatever it might be, and they take the deduction that year instead. And that'll usually result in a higher tax savings for them. So let's take a look at someone calculating their RRSP limit. In this case, you make $50,000 a year. So at 18%, that's $9,000. We're also going to add on $2,000 of room that you didn't use last year. So your limit should be $11,000, but you have a pension adjustment. So when we deduct the $1,200 pension adjustment, your limit at the end of the year is $9,800. When we're talking about earned income from an RRSP perspective, what actually counts in order to help us grow that RRSP contribution limit? Well, from the eyes of CRA, it's net income from employment income, business income, and rental income, and it also includes disability, CPP, and QPP. But one thing it definitely does not include is investment income. So things like interest, dividends, and capital gains are not used as earned income in order to determine what your limits are. Before making RRSP deposits, know your limits, and the best place to find that information is on your notice of assessment. If you can't find that document, it's not a big deal. Just contact CRA and they'll give you the information that you're looking for. This wraps up our video on RRSP limits. If you have any questions or suggestions for a topic you'd like to see, please let us know by commenting below. And if this is your first time to the Independent Dollar, click here so you don't miss any future videos. Thanks for watching.